Let's get into investing.
Sure.
Let's say hypothetically, I have $3,200 to my name, and I don't want to pay Ice Cube to sing me Happy Birthday on Cameo. What should I do with that $3,200 that I have saved up? Let's start the journey.
Well, starting there, clearly you have no priorities. But if truly you don't want to hire Ice Cube, then the next best thing is it goes into VTSAX.
What is VTSAX?
It is Vanguard's total stock market index fund.
Okay.
It means that you now own a piece of every publicly traded company in the United States. And everybody in those companies, from the factory floor to the CEO, is now working to make you richer. It's a broad-based, every company, low cost, because it's an index fund, investment. And that's all you need. You don't need all that complex stuff that Wall Street loves to talk about.
Okay, but I have a boyfriend or I have a girlfriend and they're telling me I should get a financial advisor. I have a cousin that makes a lot of money on Wall Street and they're saying I need to go to Morgan Stanley. What do I tell those people?
You tell them that you're investing in the simple path to wealth, which is low-cost, broad-based index funds.
Okay, so I open up my laptop.
Right.
I go to Vanguard.com.
Or Fidelity.
Okay. And then I just buy.
Right.
I transfer money over in my bank and I just buy
Absolutely.
that index fund.
Right.
VTSAX.
Absolutely.
And that's how many companies? It's like 3,600 companies.
About 30. So it varies, but it's virtually every publicly traded company in the country.
Okay.
And it's about 3,600.
Now, why are index funds so popular?
Well, first of all, they've become more and more popular. And I don't know that they're so popular. They're not dominant in the market. But because this is something that Jack Bogle created in 1975, that's when he started Vanguard. And he created the first index fund that retail investors, little people like us, could actually buy. And the idea was that the research had indicated then, and it's been confirmed over the 50 years since, that active management, which is paying someone to try to pick the stocks that are going to outperform out of those 3,600, typically doesn't work, and especially doesn't work over the long term. So research says active managers in a given year, somewhere between 25 and 30% of them will outperform the index. But you go out 5 years, that drops to, 10, 15%. By the time you go out 30 years, it's less than 1%, statistically zero.
Okay, so let's talk about this idea, but I just want to double click on that a little bit real quick.
Sure.
So Jack Bogle, this guy in 1975, has this theory. Hey, if you hold a large sum of these American publicly traded companies, you will see better returns than all those guys that you see in The Big Short and those fancy Wall Street bros. You will actually outperform those people over time.
Right.
Now, all I got to say to you is this. You obviously were working in corporate America during the 80s, the 90s, the 2000s. This guy in 1975 has a theory. There's guys right now in 2025 that have a theory. So this Jack Bogle guy, he's your messiah? What made him your messiah?
Okay, great question. So 1975 just coincidentally happens to be the year that I first started investing. And I had never heard then of Jack Bogle or Vanguard or index funds. And I would not have been wise enough to embrace the idea if I'd heard of them. And the reason I know that is because in 1985, 10 years later when I did, I wasn't wise enough then to embrace them. I was an active stock picker. I was buying actively managed mutual funds that were run by active stock pickers. I thought that was the way to go.
Right.
And it took me another...
Active stock picker means guy in a shirt and tie, and he's buying and trading based on what he sees on the little ticker thing.
Or in his sweatpants in his mother's basement today. That's
sure.
It's.
But he's a smart guy.
Sometimes, but they can be exceedingly smart. But it's a game that is almost impossible to win long term. And I played it for a number of years and pretty successfully. One thing you need to understand is, actually, I achieved financial independence being a stock picker. And by extension, buying mutual funds. Let me finish. Buying mutual funds that were run by stock pickers. So it's not like it doesn't work if you do it well. The problem is it takes a lot of effort. Index investing takes virtually zero. And it doesn't work as well. So if I'd embraced indexing in 1975, I would have saved myself a lot of effort, a lot of work, and I would be much further ahead of the game than I am today, even though it worked out pretty well for me.
Look, I need to grill you a little bit more. Let's just grill it. Let's put you on skewers right now and let's grill it. Because if this is the moment to hold someone to the fire, it's a man named J.L. Collins who lives in Wisconsin.
I'm feeling toasty already.
So JL, well, I mean, just give it to me straight up. What are the returns on VTSAX year to year? What are they?
Oh, what a question that is. When I was doing the first edition of The Simple Path to Wealth, which came out in 2016, right? So I'm doing the final touches on in 2015. Nice round 40-year period of time since when I started investing in 1975. I thought, I ought to go and look that very thing up. And when I did, I was a little bit horrified because the results said that on average, it had returned over that 40-year period 11.9%. That is a stunningly high number. And it was not a number I was prepared to put in the book and suggest that anybody could rely on for their future planning. But nevertheless, that was what the market returned over that 40-year period. And this, by the way, was not some golden age. I actually wrote a blog post afterwards called Time Machine and the Future Return of Stocks. And the conceit of that blog post is I'm sitting around with some friends in 1975 around the campfire. Somebody says, hey, this guy Jack Bogle just brought out this index fund. I wonder how that's going to work. And I'm like, I'm just back from 2015 in my time machine, and I can tell you exactly what happened. And I go through all the wars, the stagflation, the market crashes, Black Monday in 87, the tech crash, the 08-09 debacle, and everybody around the campfire is like, well, glad you told us that. There's no way we're going to be investing in this index fund, let alone the stock market. And of course, the catch is that, but if you had almost 12% a year, fast forward now with the new edition out, 50 years. Good thing to look up again. 10 years ago, by the way, everybody, including Jack Bogle, was saying, returns have been so good, you got to expect the next decade is going to revert to the mean and maybe expect like 4%.
Exactly.
It was a great decade. And most people listening to us are aware that it wasn't a smooth, easy decade. It had a lot of challenges, and yet it was strong enough that it pulled that average up over 12% a year for that 50 years.
I just don't
12.2%.
JL, you got to stop. This is what I don't like. You're just being so calm, and you're telling me everything's going to be okay, and you don't get it. Every morning I check my phone, and things are bad, and you're not embracing that. That's number one, okay? So this kind of like lullaby to sleep is not the energy I need. This book over here with Christopher Robin going to the 100-acre wood, you don't fucking get it. Democracy's at stake. World War III is about to pop off, and the world is about to fucking crumble. That's number one, and you're not embracing that. Number two, want me? No, I don't need you to push back, because really what I'm doing is I'm channeling the energy of every heterosexual man that's in their 20s and 30s. You want me to be happy with a measly 12% on average return when I need to come up now. Look at these returns. If I was dumb and I invested in VTSAX, I get 12%. But look, if 10 years ago, I go all in on the real stuff that makes the world turn. All I do is I hold FANG plus NVIDIA, Meta, Amazon, Apple, Netflix, Google, and NVIDIA. Wow. I would have gone up 713%, 873%, 633%. 1,268%. JL, had I put my $3,000 into NVIDIA, I would have gone up 26,209% in 10 years. So fuck your 12%. JL?
That's amazing. And if you had wings, you could fly. So what crystal ball did you have 10 years ago that told you that?
I don't
have one? Well, yeah. Obviously, if you knew that was going to happen, if I knew that Bitcoin was going to go from a penny a coin to $100,000, I would have sold everything and gone into Bitcoin. The thing is, you don't know that's going to happen. And there's a lot of stocks that looked every bit as promising as those that you put up 10 years ago that flamed out and went to nothing. You would have wound up broke. Here's a quick story.
Sure.
When I was dating my wife.
Yes.
Okay. She'd never been to the horse races before.
Okay.
My dad was taking me to the horse races when I was 5.
Yeah.
And I was going with some clients and their wives and girlfriends. And so I invited her to come along. She didn't want to come. I'd never been. So they just come along. It'll be fun, nice people.
Yeah.
Well, how do I bet on the horses? I said, I don't know. Bring $20. You're going to lose it anyway. and then pick the horse that looks good. You like the colors, you like the whatever it is, because you're going to lose your money. It doesn't matter.
Yeah.
So we go, she looks at the program and she picks this horse randomly, very long odds, like 30 to 1 or something.
Got it. But you've already established the premise.
Right.
Take $20, you're going to lose it, but do it just for the fun.
It's got zero chance of winning, this horse, right?
And your beautiful wife, she is having a vibe. She feels like that particular horse is going to win the whole thing.
Right. I don't even remember why.
Okay.
Right. But nevertheless, that's the horse she put her $2 on. I figure, okay, this is going to be her first lesson in reality. So we're down at the wire. We're at the fence. We're watching the horses come around into the final stretch. And guess what? Old Paint or whatever it was comes from the back, up in the outside, and wins.
Sick.
And she is beyond excited.
Amazing.
She's jumping up and down. And when she settles down just a little bit, she turns to me and she says, "Why didn't you tell me to put my whole $20 on that horse?" I said, "Jane, because I didn't know it was going to win. If I'd known it was going to win, I'd have mortgaged the house." You don't know which horse is going to win. But I do know that VTSAX will reliably make me wealthy. And 12% a year compounded over time, 8% a year. Let's be much more conservative. Compounded over time is an extraordinarily powerful thing.